Well, good evening, all. Ira Epstein, and here we are with your financial market update. And this update is for Monday, the 24th of October, 2022, just getting on to 7:10 a.m., p.m. Central Time. To me, it's like a.m. You know, I get up so early. I get up 3:30, 4 in the morning, and I'm working 4:15. I'm recording my morning subscriber video by 5:30. Does that give you an idea? And I've already typically laid in bed, got my buddy Ivy, my girl, my little kitty, and we're watching Bloomberg or CNBC, typically getting a feel for what the markets are looking. The difference between the two is Bloomberg basically talks the general market. I go to CNBC because they talk mostly individual stocks. That's really the difference, okay, that I've noticed. They might say different, but I've only been watching them since they both have been on the air. So that's pretty much how I view what they do, and they both do great jobs of it. Okay. So we've been getting a rally as the market is staying enamored with the idea that, oh, the Fed is going to be doing a pivot, or the Fed's going to be discussing how they will eventually turn around from this. Now, the Fed has to do that. Why? You do realize when the Fed's looking at the data, they're not looking at today's data. At the very least, the data is 30 days old. What? If they're looking at data from the month of September, or let's go to October, the month of October, and they get it in November, it's at least 30 days old. They take an average, whatever it was, and away they go. Some of the data we get, like tomorrow you're getting some data in the market, some economic data, is from August. It's useless data. So the Fed's problem is most of the things they look at aren't real time. They are a delay. And that delay can get you in trouble, that they didn't act to get easy enough during the COVID part. And they may be too late and break the economy if they don't go quicker and reduce rates. That is the argument. I've given you the gist of what the argument is between the two different camps. And in reality, what they don't talk about, the reason for it. The reason is the data is old data. They're not looking at day-to-day data. I didn't say they can't, but that's what they're looking at. If they're looking at the PCE that's coming out Friday, it's a month old. When you and I are going to see the jobs data, that's going to be from this month when it comes out next month. CPI is going to be 30 days old. I mean, that's how they work. And some of these reports that they'll get in November will be September reports. So all of September, all of October, they compile, and I don't know where they come out in November. You're getting the story. That's the big argument that they're going. And I don't think anybody explains that enough, and I thought I owed it to everybody. So let's go to the charts. We're in a bounce area. Okay, can you get up to the 18-week average? I've got my doubts, but you could. It's a logical number at 39.11 for resistance. Going to the daily charts, you can see that the pattern is one most certainly of higher lows, higher highs. Bullish. Oh, I've got to be careful what I say there. The market is over the 18-day average. Oh my gosh. You got the trend up, and I define bias this way. It's so simple. If you're over the 18-day average, you have upside bias. If you're under, you have downside. So if you're getting buy signals at any time under the 18, no, it could be a reason to not be short, but it's not a reason to be long. And if you're getting sell signals over the 18-day average, no, that's not a reason to be short. It just might not be a reason to be long anymore. Comprehend? Where's the Bollinger Band? I've been talking the 3,800 level, and I started talking about it a little while ago. It's hard to predict where that band's going to be every single day, but darn it, you're all of 34 points away. You're in a zone where somewhere between this band, at the most, in my opinion, and the 100-day average, you're going to peak out and come down for whatever reason. Disappointment, that the CPI is still too strong, jobs data is still too strong. Something's going to happen there, in my opinion. Could I be wrong? Easily. I'm the Swiss cheese guy. I'm the guy that tells you, hey, I was dead wrong in my thoughts on that. Happens. Happens to the best of the guys. When you look at the S&P, you're right in the zone already. You're overbought, You're approaching it. You've got the same window there. You don't have to reach all the way up there. You're already in that zone. You're there now. The strongest markets have been the NASDAQ and the Russell. So here you come on, back to it. All right, there you go. I'm looking at the market, getting up, if you will, into overbought territory. And you're at the 100-day and the Bollinger Band. That's why I said here's the Dow. You can see it's the strongest. The Russell up here. So you've hit the Dow resistance point. You've got the Russell and the other to go, and they were the ones that traders have been trying to be long the most. I couldn't begin to tell you why, but that's what they're doing. When I come over to the VIX, I always look to the VIX as it coming down. Why? If the VIX falls hard, it means people don't want insurance. They're typically bullish. Now, that's the simplistic way to look at it. I know there's option theorists out there that say they're really not doing it that way. They've got their option trades on, blah, blah, blah. Okay. At the end of the day, the most simplistic works. And you're in a downtrend, which is friendly, the market at this point. To get the market and scare the bulls, you got to get over 3190. Otherwise, you're still in a downtrend. The lower it goes, the friendlier the stock indices are. When you come over to the 30-year bonds, you don't want to be short under Bollinger Bands if you talk to somebody like me. Why? Because only 5% of the time you're going to stay under it. Now, there is a difference between futures, TLT, BND, and the Spiders ETFs. I've always seen it. They can go a little bit longer, but not quite as much. Part of the reason for that, is that they trade from 8:30 until 4, Chicago time. These are 23-hour markets. They open Sunday night. They don't close until Friday at 4, 23 hours a day. They don't trade it the same way. Understand the nature of the beast that you're working with. When you get to the 10-year note, same thing. But are we embedding here? Okay. So the market has got a 21 reading. It's trying to say, no, I don't think I'm going to embed here. Now, I do recall last week that I was here talking to you, and I think I said, we're going to get into this week and this big bear play. Traders at some point are going to start taking money off the table, reassessing what they want to do. By later in the week, it's still a little too soon. It's one thing to cover some shorts here. It's another to put new money to work just yet. You got to get closer. You probably want to see the European Central Bank and the Bank of Canada, what they do with their rates, and maybe the PCE number on Friday too. And then you want to deploy money for whatever the Fed is going to do if you go into those reports. And Moi does not go into those reports. He tells you to stay away from them. But that's how the other group trades. Well, if you keep it and you can close over 21, then I think you got a shot to get back to the 18-day average before it re-embeds. In the dollar index, I'm looking for the whipsaw back and forth right now, but the bias is down and the trend is down. The bears took control in a very narrow band. The difference between the high, 113.83, and the low is 325 points roughly. I don't know. By the way, did you see our kids' math scores because of COVID? They're in the lower 26th percentile. There was just a study out. I do all this math in my head. Am I right all the time? Nobody's right all the time, but I'm better than probably 95% of the people out there that I can take a series of numbers, put them in my head, add them, subtract a lot of them, and keep it going, all right? Because when you're in the old days, when you were in the pit and you were figuring out your positions, what do you think you were doing? You were looking at this amount of points long or short. That's exactly what you were doing. These are my points. Here's what I've got to do. A point could be a contract. A point could be what you're ahead in the market. It's whatever you were used to doing it with on your card. And you guys that are there looking at me that were in the pit, you know I'm right. And that's what we did. That's how you kept track. You're trading too many contracts. You know, you're worried are you long or short. I'm saying I've got these many points. Where am I right now? And you'd have a kid like they'd hire me at the beginning. Oh, you're long. Oh, you're short. That would be their job. Yeah, that's the old days, not anymore. In the eurocurrency, if we rally, you can get up here now. They're talking anywhere from 75 to 150 basis points. That's the analyst talk right today of what the European Central Bank may go with. We'll see what they do. They generally are behind the 8 ball. When I heard 150 basis points, I mean, that would give a big pair of kahunas, not swearing, to Miss Lagarde. I don't think she's going to do that. I think 75 to 100 basis points would be really pushing her to her limit. Okay, 150, I'd applaud it, but I don't think it's going to happen. Bitcoin just stuck sideways. Remember I told you about that bottle of wine on your stove? You laid it down and there's heat and it's melting and here's the neck and it's getting longer and longer. Well, as that's happening, pressure's building in this. It's going to break out one way or the other. You wait for it. The volatility's come out of the market. It's not going up with the stock market anymore. I told you here last week that the new correlations, they've tied this market more to the gold market than that for the time being. Whatever they do, who cares? There'll be another big group of money that ties it to a sewer cover, whatever they're going to do. When I look at the differentials here between Brent and WTI, okay, we got up to $8. Pulling back a little. You can see the resistance, the 200, the 100, the upper Bollinger Band moving averages, first two of those, then the average, with support at the 18. You've got the trend down, the bias up, and momentum just drifting. I don't know what to do with the market like that. Nor do I know what to do with WTI. I don't have a bullish or bearish theme in it. It's a downtrend that got to the 18-day average and got stuck. It's that simple. I don't see anything to do there. Heating oil, I want to be long when it gets cold, obviously. Demand will come back for it. You can see how the market got down to the combination of the 18 and the 100, and you had a bullish crossover where the 18-day average got over the 100. Yeah. Nobody's talking about that. That often calls for the market making a run to higher highs before you get under the most recent low. We'll see if that's going to work. You've got mixed signals here. Number one, you don't have a real trend. You've got, I really should take this arrow and have it pointing from right here up. You got that arrow pointing down and this arrow should be right there. Momentum down. It's a rough market. And, you know, I've been looking for a bottom in nat gas. I'm going to stick my neck out. Got it? Here it comes. Until this low is taken out. Today, Monday's low. With the loss of the embedded reading, nope. If the embedded reading gets lost, then I think that'll be your low. But as long as it stays embedded, it's just a bounce to the right-hand side. Give me that event where you lose that reading over 21. I'm going to get very excited. Okay, and I'll be talking about that each morning as we talk on my futures updates. And remember, at approximately 5:30 in the morning, I am there recording each morning. I've already read what's going on in Asia, Europe, the United States. I'm bringing you the reports. I'll talk about what's coming out that day and the events overnight that might be impacting the market and give you warning signs or all go. Here's what I think. I think you have to be aggressive today. I think you got to be less aggressive today. Here's what we're looking at. Here's the trades. I cover all these different sectors. And folks, I say buy here, sell there, do this. Here's the stop. And I do follow through with it so that you get an idea as to how to work with it. But because we're doing this on charts, I'm able to go back and forth in the video and show you, hey, here's how the pattern came together. Here's what I'm thinking. And what's the idea here? Not for me to be right, but you probably have your own idea and you need a nudge. Maybe that's what I can offer. So how do you get it? Just go to our website, go up to research, read about it. It's right there for you. I'm Ira Epstein. You have a great evening. Talk to you tomorrow.